And hi everybody, it's Tim Razor, the Chief Investment Strategist here at River Asset Management, just before 4:30 on a Tuesday night, a turn south for the markets Tuesday. And I want to talk to you about that very much. But before we do that, stock owners, market lovers, let's do this. I want to show you the daily market insight. There's two things in here that I think you'll find very beneficial. These last two videos I'm going to reference. Here's Don's video, 21/21 stock list. That's a really big watch list for the stock nerd and market lover community across the globe. It's watched heavily and downloaded, and I'm telling you, that list can serve you very, very well in the week still to come for the rest of the week. And then there's a lot of things we discuss in here that I'm going to reference tonight from this video here, the video podcast. If you haven't seen the video podcast, please, 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 you can download it. You can watch it. Oh, before I talk about where to direct message me at, contact us right here. Here's my email address. If you take umbrage with anything that I'm saying, there's Don Vanderboer, the portfolio extraordinaire, America's fiduciary right here. There's a horrible arrow I drew for Don, right? There's Don. And then if you want to get a hold of us, you like the strategies to which we espouse, you like what we're doing, or you simply have any questions, 855-732-5932 is how you get a hold of us. And look, we don't have salespeople. We don't need them. Everything we do, we grow word of mouth. So if you want to call and ask a question, feel free to do so. And knowing you're never going to be hounded. You won't be contacted again, I swear to you. We only talk to the people that want to talk to us. And I mean that in the nicest way possible. Meaning we treat you the way you want to be treated. It's like a normal relationship, not some kind of marketing nonsense that you get from JohnnyBagOfDonutsBroker.com. And so let's do this. These videos are for what? Stock nerds and market lovers. Your edification purposes only. They're never ever to be misconstrued as advice. If you want advice, if you need advice, seek advice. All you have to do is, in fact, give us a call at that 855-732-5932 email or a phone number. We're probably saying, Tim, why don't you give your email address out? I do, but look, emails get long-winded by a lot of folks. You don't mean to, but they do. And so what I want you to encourage you to do is either phone call us, give us a call. It's a lot easier, or you can do this with Twitter. At TJ Razor is my handle. If you hate Twitter, just follow me, follow Don, follow Danny, and then let me know that you followed me. You can do that. Just send me a little note, and then you know what's going to happen. I'm going to follow you back, and then we can direct message. It's the closest thing you're going to get to my phone number, and it allows Twitter's brevity. It's quick. And you're going to get an answer much, much more quickly than you will in a filled up email inbox. Okay, so with that, stock nerds, market lovers, these videos are for what? Your edification purposes only. They're never ever to be misconstrued as advice. If you want advice, if you need advice, if you seek advice, all you have to do is, in fact, give us a call. Look, you know this put call ratio. We talk about it all the time. Super duper low, pointing down there. The VIX finally goes up a little bit here, but it stops right at the mid-level of the Bollinger Band. And this is still a bullish chart of the S&P 500 on a weekly from this flat base, but the 3-week tight breakout last week. And you're pretty much holding your own. So it's not really, so it's like, well, Tim, what are you so bearish about? Man, there's been such a heavy rotation out of the leaders, and you can see Zoom here, which I still hold, by the way, and I'll try to get to that as I've got a lot to cover here. You can see Zoom on a daily chart. Starting to take its wax. Well, let's cover Zoom here right now. I like it on the weekly. It's a flat base that's developing, but this is kind of where the rubber meets the road. You can see where from that gap up here, this is that consolidation on a weekly basis. And so I talk about in this video, if you give me a second to pull it up, I talk about in the video podcast this week. I've been talking for a couple of weeks now. You want to use smaller size and widen your stop. So all my positions are less than 5% for the most part, unless they're legacy positions. But ever since the middle of July, all my positions have been like 2.5%, 3% positions, nothing like a 5% position or greater. And so that's really helped me. So Zoom is like a 3% position, not that big of a deal. Doesn't mean you want to let it run into double-digit losses. It just means that you can take smaller position size. So we'll put 2.5 to 3% of a portfolio. I mean, that's of an overall portfolio, stock nerds. Okay, 2.5 to 3% of an overall portfolio, and you want to widen your stops. And so the exact opposite of what I just described here is for the folks that have 10, 25, and some of you've got 50% positions. I know you email, and in certain stocks because they're only going up, right? And so that is when you trade a little too tightly and you tighten your stops and you get stopped out often, or you don't believe what's happening because every dip's been bought and you feel completely hosed tonight. And so I don't want to participate in this. I want to participate in this, and that's what we've been doing. And so, believe me, we know we get a lot of questions. Why is your, especially when something's working, why is your position size so small? MTH is a big winner, and it's a 2.5% position. It's because I paired it with DHI because I didn't know what the winner was going to be. And so, but let me tell you what I did today. Let me tell you why this market is doing what it's doing, and then what may happen here over the next couple of days. And then I've got 3 videos with you this week, so I can cover everything. Okay. And for the stock nerd that tweeted with me this weekend, look, I wanted to do, if it was a boring day in the market, my plan was to do our screening process, how we buy stocks, the whole thing that we talked about on Twitter. I tell you what, if there's a boring day in the market on Wednesday or a boring day in the market on Friday when I've got the regular video, I promise you I will do it then, but not tonight. So let's do this. Let me do the moves, what I sold today. I did take some things off the table. So DDM. So DDM is the Dow. The Dow's been super bullish. And so if you look at an ATR chart here, DDM hits the 3 ATR, but you're really triggering this trade off of the futures. And you can see the futures they ring the bell and then they go lower and kind of like, they kind of trended up here, but then eventually they always revert back to the mean. So I had a really nice gain in a DDM. I ended up getting out of this. I had it when I wanted to take it off, it was like 10%, but ended up getting filled 7.86%. So DDM is plus 7.86%. Okay. Let's see. UWM is the double of the Russell. And so RTY, you're like, Tim, RTY is only down, a little bit today, right? But it's that third ATR pulls back. This is going to tie into a talk with rotation here in a minute. So RTY pulls back. So I want to take off that UWM position, and that UWM position went out at plus, what was it, 10.6%, something like that. So that's a nice gain right there. And then I took off the last half of GDX. So GDX I bought on 6/1. Gosh almighty. So I'll mark these off for you, those of you that have been following along forever. So here is the mean: 1, 2, and 3 to the upside, 1, 2, and 3 to the downside. And so here, all the way back here is 6.3, here's 6.1. So I bought GDX at the mean, right? And it pulls back there to ATR. Doesn't violate my stops or anything. And I end up selling that. This was a what was this, a 10% or a 5%? It's a 5% position, I believe, to start out with. And so that first tranche, I sold 2.5 of that. I split it 731 up in here. Oh, right here, 731. So I sold that first tranche on this day from the 6/1 entry, and I sold that. That ended up being a plus, gosh, 19, not 19, it was 19.4, I believe, 19.4% gain. And I just sold that last tranche today, and you can see the metals got hammered today. I'm going to show you what happened here. So you got this big gap down. And so I sold the second half of that tranche today at 10.1, I believe it was 10.14%. So not a bad trade. Probably could have handled that a little bit better. We took it off at the third ATR, but it is what it is. So those are 3 really nice trades. We'll see if we have some bad ones later this week. If I have to sell, I'll be selling some things at a loss. And believe me, we will talk about that. You have to talk about your losses. That's that whole reality thing. Nobody wants to talk about their losses, but I'd like to do that with you because that's how you get the courage of your convictions not to get crushed, or 2008 yourself. And so when I'm looking here, I just did the Russell, the Dow, and the the ESs. Excuse me, the Russell, the Dow, at the 30 ATR. The S didn't get up to its 30 ATR, and it really didn't pull that back that much. But if you look at something like SSO, right up there at its 30 ATR, and then pulls back. And so if you had SSO, I believe Don had that in the shop, and he took that off, or some of that off today. So you just want to understand where we are in time and space with the rotation. So it's been 3 days, right? Friday, Monday, Tuesday, where you've seen this IYT. Like, look at IYT coming up to the 30 of the transports. This is a part where you're going to start to see maybe like an AAL, a UAL. I was trying to think of the trucking company that is just eclipsed my mind. Well, we can do, gosh, let's do this one, BKNG. Booking, even Booking didn't get up to the 30, but I got up to 2 ATR. Like, there might be some rotate. How about BA? Rotation out of these recovery type stocks, and then now you might see something come back into what was working. So it's been a 3 to 4 day recovery during this pandemic, where you see the stocks that have gotten hammered, the gambling stocks, the travel stocks, the trucking type stocks, like FDX is a good one to look at. Look at FDX, UPS. And so you've seen the rotation into these. And now is that balloon going to have the air let out of it a little bit? And then are you going to see a move back into I'll just say the Amazons of the world, the leaders that have been leading during COVID, as they pull back to the mean? And so you just want to see how this all develops. And so I didn't do a lot of selling of my NASDAQ type stocks because I've got smaller position size. I've widened my stops out a little bit. I'm okay to do that. And so I think you'll see, if the market holds, and it's a big if the market holds, you'll see that type of action back, I believe, back into the stocks that have led us and before. And so when I'm looking at the S&Ps, I'm seeing something that's pulled back to the 8. That's bullish. When I'm looking to the NASDAQ, this is the one you want to focus in on, folks, because the NASDAQ, even though it comes down to the 34 after the big sell-off from 6-8, that was an 1,800 point move in the Dow. The 21 holds. It hits it overnight. You get everybody bearish in the morning, and then you move. The 21 holds, and then you move. Not even really close to 21, and then you move. The 21 holds, and you're like, well, Tim, that's the 34. No, close above the 21, and then 21, 21, 21, and then you hold. The market is reverted back to the mean. The leaders. So in theory, this for you, my friends, would be, and by the way, this is not a recommendation. We do this for edification purposes only. Never ever to be misconstrued as advice. This would be a entry, right? A low risk entry at the 21. I'm going to tell you, if this starts to close below the 21, especially if it does 2 times, you're coming down to the 50 most likely. And then what you'll see is these other indices come on down here. And if it gets bad enough, you're going to see the VIX invert. The VIX hasn't inverted yet. That's why I'm not even showing it to you yet. It hasn't done so. And so I think going into tomorrow, I haven't even talked about Tesla yet. You want to see how the Netflix, NFL, there we go. The Netflixes, which is now below the 50-day. How are they holding up? How about Apple? How's Apple, which 457, it was up in the 450s, just around 450 today, and then it couldn't hold it, and it gave up the ghost a little bit. But when you look at this chart, it's so incredibly bullish. So it just comes down to the 8. And so bullish can turn to bearish right quick in this market. And the thing that gets me to really take some chips off the table would be if the volatility futures invert. And when I see those invert in this market environment, you have like a day. Like the next day, things start to happen. And so if I saw this happening, you're going to see me take some chips off the table. And I was able to do that on 6-8 or right before 6-8 or that pullback. I was able to take advantage of that. If it happens overnight, it happens overnight. And then you got to manage risk at that point. But your smaller position size, it's hard to preach about smaller position size now when you could be on the cusp of a bigger pullback when we've been talking about it for a month. But hopefully you have that smaller position size. You're able to widen out your stops. And then if you need to take off more risk, it's not that damning to you. But when you start getting into 10, 15, 20, 25% portfolio positions, yeah, the rotation out of leadership really does hurt you. So let me show you this. Two things. Tesla overnight. I'll forget to do this again. So Tesla reports they're going to do a 5-for-1 stock split. So that's up 100 points after hours. And then let me show you the TNX, because we talked about this extensively in the video podcast. And so here's the TNX on a daily chart. It's had a tremendous move, but I don't know if the TNX move higher is over. So stocks work and gold's working while interest rates are coming down, okay? Notice the last time the TNX popped, interest rates popped and the market sold off. Interest rates have popped and the market has rotated and sold off a little bit. And then you're like, Tim, what do you mean? The market's went up for 5 to 8 days. If you've been in the leaders, not the junk off the bottom, but the leaders, the market has sold off, my friends. And so here you are at the 50-day. Is this enough for resistance? Our interest rate's about to come back lower. And this is one of the reasons why I didn't take my housing trades off, because I think this might be kind of a pausing point. If I look at the ATR charts, you've overshot the mean. Here is the mean. You've overshot the mean. Is this enough, or do you need to come up here and touch that for government work up there? So I'm not sure. And so it's the reason why I didn't buy silver. And I want to get into silver. I hope silver, still my gold position, but silver down 4.5% today. Hasn't really even gotten back to the mean. And we were talking about this on the video podcast. I wanted in silver, but look, even though it only pulls back to here and it rides that rail up, and that's a fantastic move, you just gave back 1, 2, 3, 4, 5, 6 days, maybe 7 days, 8 days. You're 9 days, 10 days of trading. You just gave back those gains. So, bulls take the stairs up, the bears take the elevator down. And so this is entering a zone for me. Like, I like to buy things on pullbacks to the mean. So let's see how they do tomorrow. The gaps overnight, and I was talking to Don about this. He's like, those gaps overnights are just brutal. It's like, and I got no rush. And so I think patience is your friend here. I think smaller size has been your friend for a while. I think you make great progress with smaller size and good picking. And so now it comes down to, what does the TNX want to do? If the TNX wants to explode higher, that means interest rates are going up, okay? So you got to think, interest rates went up almost 15% today on the 10-year, okay? And so that got the market's attention. Dollar starts finding, if I type in here the DXY, the dollar finds its bottom at this Fibo right here, and then starts working its way up. And so metals are coming off. Interest rates are going higher, and then the market's coming off. And so, yeah, the Fed doesn't want higher interest rates. The Fed, and I know what you're saying. Look, I get it. You're like, Tim, higher interest rates. I had 30% mortgage in 1980. I get you. I feel you. Higher for this market, which some of you are out there screaming at your computers right now going, if the market can't handle a 10-year note at 0.658, what would it do if it would zoom up, if it got out of control to 1%, right? That'd be destroy things. And so, yeah, that tells you how tenuous this market and economy really is. And so even though stocks have been going higher, a little blip, right? A little blip higher in interest rates, dollar stops falling. And some of those high beta names, they've come off precipitously. And so you want to just kind of keep all those intercorrelated assets is what they're known, those intercorrelated assets. You want to keep them all working for you. And you have to understand the relationships and how they affect stocks. And we can even throw in here some 6J, some Japanese yen. And you can see Japanese yen really hasn't, it's been coming off, right? But it hasn't been that great of an indicator. It hasn't, I've been using the TNX during this period because it's when you see the TNX rise up here, you know, that's a big deal. And so you see it breaking below the mean. When you see it breaking below the mean like this, can you get above it? Rejected. That's when I bought the housing stocks to put the housing trade on. Could have done that earlier, but you never know if it's going to just try to rise up. When it stymied there for a number of trading sessions, and you're like, okay, let's put that trade on. So anyway, we'll see how this all works tomorrow. Don Vandervoort, he has your video tomorrow night. I've got your video Thursday. I've got your video Friday. I've got a video podcast with Danny and Don with you Friday. We've got plenty of time, my friends, to figure out what's going on and show you what we're doing in the shop. Hope that helps, and I'll see you at the next update.